Hello, everyone. Welcome to the 5ers weekly analysis. Thank you for joining us. I hope you all feel good these days. And I would like to remind you all that, as always, if you want to get and receive any updates or weekly webinars, any trading ideas from the 5ers, you are more than welcome to subscribe to our YouTube channel, to our newsletter. You can do that all from our website. And okay, let's start. As usual, as you can see, I just pick up some four assets to analyze this week for the next preview week. And I'll start with the GBP and the JPY, and I will explain about the line that I just dropped on this chart and each one of them, what is the meaning. For those who doesn't know the method that I use to analyze the charts. As you can see, I use only supply, demand, and support resistance and work with naked charts. All right, I'll start with the GBP JPY as I said. As you can see here above us, first I would like to say that I'm on the 4-hour chart time frame. And as you can see, the supply above I marked, it's the final target as I see it now for this bullish momentum, as we can see now. And for those who already in a buy position, I think you can let the price to keep moves up and try to reach this supply, which is a great level for a sell position. So if the price reach that supply, I'll sell there. And if the price will break out this support below, which I marked in green, it indicates that most likely the price will reach first the demand before the supply above. So if that happens and the price will break out this support below, let's say something like this, I'll definitely look for a price action set up for sell position in order to reach this demand here below. If that happened, I will look for the sell position with this demand below as the target for this kind of a short-term sell position. And this demand below, it's also a great level for a buy position for this pair, the GBP and the JPY. And okay, the next one I choose is the GBP and the US dollar. And as you can all see, all right, you can all see that I just marked two levels here because the picture is quite simple and clear. The supply above and the demand below. In a short explanation, I will sell the supply and I will buy the demand here below on the fair touch of the price. We can see that the price here, after this rally, the price here is stuck and start to correct down. And the reason for that is the supply here. This one, this little one, that's the reason that the price stuck here and start to correct down. So this supply is not valid anymore because the price already checked it. Then, therefore, the next available supply will be the one above, which is here. Okay, so again, I will sell the supply above and I will buy this demand below. Okay, the next one will be the US and the oil, US oil, the WTI or whatever you can call it. You can see on the monthly chart, the situation here is very interesting since the price on his lowest level for the past 20 years almost. As you can see, the price is just now here after this significant drop down in this month, in the last month, in the previous month, the March. So we can see the price stuck here, and the reason that the price stopped this drop here is this demand from the past, which is from the end of 2001, beginning of 2002, which is 18 years approximately. Okay, so that's very interesting situation. I won't say that I will just buy here on the first touch. Still, that demand hold the price, but it's occur, and this demand happened long time ago. And also this demand, it's kind of reaction for the previous one here. So I would call it I call it demand slash support, and I won't buy here on the first touch, but I'll definitely believe that the price from that level can start to develop a bullish momentum, at least in the lower time frame. Let's take a look on the 4-hour chart, and this is what I'm looking for. You can see this supply here, which is the last one that the price created in this bearish momentum. So as I said, I won't buy on the first touch at this level, but I'll definitely keep my eyes open and look for this situation. This supply here, I marked it not because I believe that it's a smart, wise decision to sell so low. I just marked this supply as a confirmation zone for me, because if the price will break out toward up this supply, I will look for a price action setup in order to buy the US oil. And if that happened and I'll succeed to find any buy opportunity and buy the US oil, the final target for this position will be this supply at the top, which is a great potential. And this supply at the top will be a great level for a sell position, but for the long term, we can let's switch back to the monthly chart. And if the price will reach this supply, and you can see also that this one, the supply that we just marked on the 1-hour chart, just broke out this significant support from the left. You can see that it was a support resistance many times, this zone in the past. So I believe this supply is very significant one, and if the price reach there, I'll sell, and the long-term target will be the next available demand, which is here at the bottom. Okay. All right. Last one I choose will be the index, the Dow Jones index. All right. And as we can all see, after the last few weeks and the drop down of the price, like most of the indices in the world, the price just start to develop a bullish momentum. Of course, we're still talking about the lower time frame. It's the 1-hour chart. It doesn't indicate for the long term momentum, and still I believe that the last drop in the last few weeks change the long term momentum from bullish to bearish. So I will consider this bullish momentum only as a technical correction for the long term bearish momentum. And okay, so we can see that the price create here a very reliable and powerful pattern which called Quasimodo. All right, as you can see in the previous downtrend, the price create high and lower high and lower high, and then from that level, the price creates a very convenience higher high, and that create here this level, the Quasimodo level. It's also a demand, and as you can see, usually in Quasimodo pattern, the right level to act is the same level as the left shoulder, what we called here, which is also demand. So it all combined together for a very reliable situation. And if the price, of course, only if the price will reach that level, I will buy this index, the Dow Jones. The final target will be the first supply here above. If that happened and the price reach the supply, I'll sell this supply. And if the price will surprise and keep a rally up and break out this supply, I'll close this sell position and open another one at the supply here at the top. So let's take a look on the weekly chart. sell this supply if the price will continue up, which is something I find hard to believe, but you know, and it can happen, and the price in the market many times can surprise us. But if that happened, I'll definitely consider to sell again at the supply here at the top, which is the level that start all this drop down that we can see here. Uh, so that's all for the Dow Jones, and that's all for today. I would like to remind you all that during this time when the market is very volatility, and as we can see, the price creates many opportunity. It's also the same for the second side. It's more risky market, so we all should be much more careful and manage our risk in a clever way. I wish you all successful trading week and see you the next week. Thank you for joining us. Bye bye.